The most common areas are currencies that you cannot recognize or hidden currencies that you can find with this strategy and trade against them. In this video, you will learn about the best currencies in the market. Liquidity tells us how quickly and easily an asset can be bought or sold. Therefore, good liquidity means that an asset can be bought and sold quickly and easily without being affected by its price. On the contrary, bad or low liquidity means that an asset cannot be bought and sold quickly and easily. If it has, the transaction will have a significant impact on its price. Order block, or OB. Order blocks on an asset's chart refer to the ranges of supply and demand where smart money will aggregate its orders from large entities. In other words, block orders are formed when there is an imbalance between sellers and buyers. Then the structure of the market will be broken. In the same way, the current state of the market and block orders will change significantly. It is important to note that the block order is formed before strong movements in the market. In fact, they form a level that will quickly move away as soon as the price hits that level, and this is due to the large volume of orders that have already been registered at that level and are waiting for the price to reach the desired range. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. Imbalance. Disequilibrium refers to market trends or ranges where there is inequality in market control. It means that only buyers or sellers are present in that range. Disequilibrium levels lead to strong candlesticks in the market. If the candlesticks are bullish, the power to control the market is in the hands of the buyers. And if the candles are bearish, that means the power to control the market is in the hands of the sellers. Break of structure, or BOS. A breakout of the structure occurs when the price of an asset in its current trend breaks the last previous high or low in the direction of the same trend. In other words, in a bearish scenario, the breakdown of the structure is formed when the price breaks the trend line of the previous floors downwards, or in a bullish scenario, it breaks the trend line of the previous ceilings. Note that with the failure of the market structure, the trend change does not happen, and the market continues the same trend as before. It just takes a new trend line to form floors and ceilings. Identifying the range of aggressive initiation activity. Aggressive initiation refers to a significant movement in the market, resulting from price increases by aggressive buyers or price decreases by aggressive sellers. This aggressive selling or buying often happens after the asset trades in a fairly constant price range without a clear trend, which is why it is called an aggressive start. To understand aggressive startup activity in smart money, you can think of it as financial professionals and knowledgeable institutions gradually building large positions in a range. Their orders are then traded aggressively to move the trend in their desired direction. Note that if you want to trade with this style of smart money, it should take this into account. When asset prices move in a fast trend, you may not have enough time to place your trading positions, so it is better to take your positions before starting the offensive move. But considering that this strategy is important, click on the word that you see in the video, and click on the chart along with Stochastic RSI and the liquidity swing indicator. Only one setting should be different, and that is the third option. Click on the chart and cut the chart by doing this for the entire area. It finds out what has been spent or not, and tells you where to buy. It is convenient for you to combine these two strategies. For example, when the price reaches an important resistance area, the levi, which is the beginning of the movement, is illiquid, and the price must spend the high first, then fall. It should also be spent, then when the price reaches the area, with the RSA indicator, if it is able to hit, the liquidity will be good and the trend will change, and the price will change from rising to falling. But if the price cannot reach or is spent, the amount of orders in that range will accumulate, and it pulls the price to itself. When it pulls, it means that the price returns to that area again, and it hits and continues the process, so that those who are at the level of taking the tube should also stop them. Thank you for watching the video so far. I hope you can make the most of it. Watch the video related to the strategy.